Are you suggesting that B cannot compete in any of the markets you just listed? Yes, without a doubt. Given that the Chinese market is the most competitive, why couldn't you succeed in other areas if you were able to win in the most competitive market? Look, I don't think this really lessens what Tesla has accomplished. BYD and Tesla are in a two-horse fight in China. In my opinion, Tesla had a record-breaking quarter in China, and we'll find out in the coming weeks. Imagine a future in which the two leading manufacturers of electric cars collaborate. Doesn't that sound like something from a science fiction novel? But buckle up, because this incredible scene may be closer than you think. While the two titans have been fighting for years to dominate the EV industry, there are indications that their icy relationship may be starting to warm up. Let's introduce BYD, Tesla's fierce opponent. The first sign of a possible change in the industry was in 2022 when Tesla started using BYD's LFP batteries in some of its German-built Model Y vehicles. This was an unexpected move considering their long history of bitter rivalry. This preliminary cooperation suggests that both sides may be beginning to recognize the benefits of collaborating. But how would this partnership help both businesses in the long run and impact Tesla's stock price and valuation? Before we explore these options, please remember to tick the like and subscribe buttons. Let's get going now. Do you agree that Chinese businesses might dominate the market and compete fairly in the absence of trade barriers? But there's also another angle to take into account. Consider BYD as an example. Rather than focusing on the local market by crossing borders into the US, they have made manufacturing investments in Mexico. Instead of becoming national, their approach is focused on the local consumer base. Let's also take a look at a historical equivalent in the automobile. Do you recall when Japanese brands first appeared on US shelves decades ago? Similar concerns existed before then, yet local companies managed to prosper in the face of international competition. It's possible that worries about Chinese competition in the electric car market are exaggerated. Tesla's profit margins are being squeezed in the interim and might stay that way for a few months. Many investors may be disappointed if Tesla's profitability declines this year, despite the fact that certain bullish emotions persist. How do you feel? Do you still think highly of Tesla? If so, know that you are not alone in feeling that way. You know who else is as optimistic about Tesla as you are? Our pals from Seeking Alpha. It's not enough to merely watch Tesla's phenomenal rise from the sidelines. Seeking Alpha is your one-stop shop for the most recent information on Tesla, Tesla stock price targets, Tesla innovation, and everything Elon Musk related for fans of the company and those who have an eye for finding the next big stock market find. The internet's top pro-Tesla news outlet is Seeking Alpha. Get to the facts without listening to the lamestream media's anti-Tesla propaganda. To take advantage of a special discount, click the link in the description. Still, what if Tesla modifies its strategy to increase the value of its stock? What if they choose to join forces with their fiercest competitor, creating a groundbreaking alliance in the EV and car industries? Consider the options. Beyond merely batteries, a partnership between Tesla and BYD might lead the way in breakthroughs in autonomous driving, battery technology, and other vital EV development areas. When combined, they could reduce production costs and increase the number of people who can afford EVs. This united effort might accelerate the transition away from gas-powered vehicles and secure their dominance in the EV industry. Let's get straight to business. What effect would this partnership have on Tesla's stock price and valuation? A strategic alliance with BYD has significant potential benefits, even though success is not a given. An alliance of this kind would boost investor faith in Tesla's long-term goals and capacity to rule the electric vehicle market. This optimistic view may raise the price of Tesla's shares. Additionally, the partnership may result in faster growth and a larger market share, securing Tesla's place as the frontrunner in the EV revolution and possibly raising its worth. Of course, obstacles could include resistance from within both businesses, as well as the difficulty of finding the ideal balance between cooperation and rivalry. But a well-thought-out alliance might revolutionize the electric vehicle market, helping BYD and Tesla alike, while hastening the world's shift to more environmentally friendly modes of transportation. Who knows? Tesla's stock price may even have a happy ending as a result of it. In other news, the leading electric vehicle manufacturer, BYD, has just debuted the U9, an ultra-luxury sports car under the Yangwang brand that will set you back a hefty $233,000 in China. This most recent model demonstrates BYD's competitive approach across the board, which helped it overtake Tesla as the biggest electric vehicle manufacturer last year. I had the chance to have a conversation with Stella Li, the Executive Vice President and CEO of BYD America, about the company's development and its goals for markets outside of China. Li claims that BYD observes comparable EV adoption trends in nations like Brazil, Thailand, and Israel, which are consistent with China's 10-year trajectory. Li emphasized that BYD's performance in China's extremely competitive market is encouraging for the company's international development and expressed confidence in the company's ability to compete in these countries. She also emphasized Biden's emphasis on innovation, which positions the business as a leader in technology in addition to providing chic and contemporary designs. In terms of growth, Li disclosed intentions to establish production plants in Thailand and Hungary with work already underway in Brazil. In order to serve the Mexican market, Biden intends to disclose its intentions for a facility in Mexico in the second half of this year, with a focus on the South or Central region. Even though Tesla stock has recently dropped, some investors still believe there is a chance to fund the company's wider technological endeavors than just electric vehicles, especially considering how much the stock is now worth compared to a few years ago. But not every expert is as upbeat as this one. According to Mark Houghton, an investment director at JM Investments, a number of obstacles, including its price reductions and probable declines in demand, would prevent Tesla's stock from ever reaching $300. Tesla's exceptional profit margins, which are a reflection of its operational efficiency, set it apart from its competitors in the automotive industry. The business generated $81.5 billion in revenue in total in 2022, with an operating profit of $13.7 billion, or a healthy 16.8% margin. Comparing this to us peers like Ford and General Motors, which usually run on single-digit margins, is a sharp contrast. Tesla's profitability is influenced by a number of things. First off, there's no need for expensive promotion thanks to its well-known brand. Furthermore, effective management has increased battery production capacity, streamlined manufacturing processes through vertical integration, and avoided dealership networks by selling directly to customers. These tactics increase profitability and margins. Furthermore, Tesla is at the forefront of AI-powered self-driving software and is planning to enter the autonomous robotaxi market by 2024. According to preliminary estimates from ARK Invest, autonomous vehicles might open up a $14 trillion industry by 2027, which would help Tesla's expansion. Additionally, there has been a sharp increase in demand for Tesla's home solar and battery storage solutions, with battery storage capacity deployments rising by 360% year over year in Q1. In the future, Tesla might expand its product line by bringing in the Optimus humanoid robot by 2027, which would target. With predictions pointing to a spike in worldwide EV production, Tesla is well positioned for long-term development as the electric car market expands. Tesla's aggressive expansion goals are in line with industry projections. Currently, only 10% of new cars sold are electric. However, by 2040, market share is expected to rise to an astounding 61%, which bodes well for both Tesla and the EV sector as a whole. Since the electric vehicle business is still in its early stages, Tesla's strategy is more concerned with securing a large long-term market share than with making quick cash. Tesla has everything it needs to establish its supremacy in the growing EV market, even though it must contend with newcomers like Rivian Automotive and Lucid. Tesla wants to maintain its position in the market and fend off any threats to its business by maintaining low prices. Furthermore, the possibility of a partnership with BYD may raise Tesla's market value even further. Recently, Chinese automaker BYD debuted the $233,000 U9, an electric supercar that is expected to compete with names like Ferrari. The U9 has remarkable specifications and can reach speeds of up. Holding on to their optimism on Tesla's trajectory might result in substantial gains. Regarding the prospect of a collaboration between BYD and Tesla, the advantages seem quite attractive. This concludes the video. Please remember to subscribe to and like our channel. Welcome back to Tesla Stock News. We hope to see you in our upcoming videos.